This is TechCrunch. Nuclear startup Deep Fission announced on Monday that it has gone public in a reverse merger, netting the company $30 million. No, it's not 2021. The startup is proposing to build small, cylindrical nuclear power plants and lower them into 30-inch diameter holes drilled 1 mile down into the earth. By burying the reactors, the company hopes to solve several problems that plague current reactors, including concerns over meltdowns and potential terrorist attacks. Deep Fission's 15-megawatt reactors are cooled using pressurized water, the same type found in nuclear submarines and many existing power plants. Earlier this year, Deep Fission inked a deal with data center developer Endeavor to build 2 gigawatts of underground reactors. As recently as April, the startup had been attempting to raise a $15 million seed round. In August, Deep Fission and 9 other nuclear fission startups were selected to be a part of the Department of Energy's reactor pilot program, essentially a streamlined permitting process. Under the terms of the reverse merger with 4-year-old Surfside Acquisition, Inc., the offering was priced at $3 per share, below the customary $10 that other SPACs target. The new entity will retain the Deep Fission name, and though its shares aren't yet trading, it says it intends to quote on the OTCQB. The circumstances around the SPAC, the share price, the selected equity market, and the timing of the transaction suggest that Deep Fission was not able to raise cash from new or existing shareholders, who first capitalized the company with a $4 million check last year. The proceeds of the merger give the startup a bit more runway than its ill-fated seed round would have, but it also imposes SEC reporting costs for what is likely a small company operating in a very expensive sector. Deep Fission is hoping to start its first reactor by July of next year. The corporate space world tired Bianca Cefalo to the point that she found it easier to literally start her own space company and launch objects into orbit. Cefalo is the founder of Space Dots, which launched in 2022 to detect space threats. She and her team have created a software platform called Sky Eye for space tech manufacturers and operators to help them detect, interpret, and attribute natural and human-originated threats in orbit. Now, she spent decades in the industry working on projects that have put objects on the moon and launched satellites into orbit. She worked as a thermofluid dynamic analyst on the NASA InSight mission to Mars and was a product manager at Airbus Defense and Space, working on telecommunication satellites. She found, however, that industry politics and corporate bureaucracy were bottlenecks to progress, saying, "I got bored of the game." She recalled that every time she would pitch an idea to her last employer, she was met with resistance. The response was always the same. "If it hasn't flown already, we're not using it on our satellite. We were told to innovate, but they refused to adopt anything unproven. I was hired to be an innovator inside a corporate giant, but in reality, I was being told, not too much." And in that, she rewrote the rules. Cefalo said that nearly 15% of spacecraft experience some type of anomaly or failure due to manufacturers' and operations' misunderstanding of what space is actually like. For example, what might work in a low orbit will not necessarily work in deep space. Radiation alone can cause various mishaps that can lead to spacecraft failure, while other accidents in space are dismissed as glitches or space weather because, well, there isn't enough data to explain what is actually happening. She says Space Dots fixes this by generating proprietary in-orbit environmental data and fusing it with external sources into real-time attribution, nowcasting, and forecasting, giving spacecraft the intelligence edge to survive and succeed in contested space. SpaceDot is already capturing data from its payload and plans to get more from future launches. The company announced Monday a $1.5 million seed round led by Female Founders Fund. It's now raised a total of $3.2 million in total funding. Cefalo described the fundraising process as dating to marry, or, in other words, brutal. She met her lead investors at Female Founders Fund by simply using the firm's online cold outreach form. She also asked her investors at Sci Ventures if they could make a warm intro to the FFF team. Other investors in the round include Field Ventures and General Electric. As Cefalo said, the space industry is going through a second revolution, especially as billionaires pour millions of dollars into commercializing space travel. Competitors include names like Ensemble Space Labs and Mission Space. Cefalo said her company is different because SpaceDots owns both its hardware and its software. It's focused on commercial, defense, and threat attribution rather than just forecasting. And its software is also decentralized, which Cefalo says makes it more resilient and scalable for future cislunar and multi-orbit operations. And one final story for you. Bloomberg reported that Cognition AI, the startup behind AI coding agent Devin, has hit a $10.2 billion valuation after raising $400 million, marking a jump from the company's $4 billion valuation earlier this year. Founders Fund, the Peter Thiel-backed VC, led Cognition's latest round, with participation from existing investors like Lux Capital and others. In July, Cognition acquired AI coding startup Windsurf, just days after Google poached the startup's CEO, co-founder, and research leads. The raise comes after serious growth for Cognition's core product. The startup's annual recurring revenue from Devin has climbed to $73 million in June, up from $1 million in September of last year. Net burn has remained under $20 million since its founding 2 years ago. That's all according to Bloomberg. At the same time, the company has built a reputation for placing strict demands on its workers. Just last month, Cognition laid off 30 staffers and offered buyouts to the remaining 200 employees, offering them a way out of the expectation to work 80-hour, 6-day weeks. That's it from TechCrunch. For more bite-sized, crunchable tech stories like these, go to TechCrunch.com.